It's hard to imagine an elephant dancing, but if that elephant is the State Bank of India, SBI as popularly known, you are in for a surprise. SBI is India's biggest bank with 450 million plus customers. As an Indian, you may be able to rattle hundreds of challenges and inefficiencies of SBI, but its contribution towards India's growth is second to none. SBI has groomed the finest talents and established financial services and products that have paved the path for other banks. Though established in 1955, its creation dates back to the Mughals and the East India Company. There are several case studies about SBI cards, insurance, and other financial products, but a less talked about aspect is its talent. There are innumerable examples of SBI chairmen who, in an unassuming manner, have led the bank through its ups and downs to where it stands today. Now, in the 21st century, with the advent of neobanks, SBI has brought You Only Need One, its digital app play, to the arena. And the reason I looked into SBI's fascinating history and is because I read about in Weekly Olio, an online weekly newsletter written by Mohit and Piyush. So I invited them to co-host this conversation with me. We kick this off with Mohit and Piyush introducing themselves and talking about the exceptional growth they have witnessed with the newsletter.
Hi, I'm Mohit. I run a software startup called Mezink in the social media space.
I am Piyush. I am currently handling strategy at Tata U, dubbed to be one of the India super app. Mohit and I both run a weekly newsletter as well called Weekly Olio. We have around 80,000 subscribers as of now and are circulating around 30 plus countries.
Interesting. I think 18,000 people that you're talking about, you should probably deep dive into that. That firstly, how did you start? And second is that 18,000 came from 20 editions. Is that correct?
Yes, that's right. Initially, it started as a way for us. So we used to just share articles, interesting reads, Twitter threads, quotes within amongst each other, with our friends, with our peers. We started getting feedback that this is interesting. Why don't you share more? And why don't you share the source of the articles as well? So in November 2022, we decided to formalize it into a newsletter. Started with a curation piece where we had a unique format. We did one quote, one Twitter thread, one infographic, one short read, and one long read. Covered all sorts of topics: business, finance, economics, tech, startups. And of late, we also added something called Publisher's Parmesan, which is where we write an original thought piece on any topic which is of interest. Usually, it revolves around tech, startups, India, China, Southeast Asia, because that's where we have played over the last couple of years. It has been 20 editions and we've seen tremendous response. Our friends gave us good feedback and it has grown organically. We have a good set of founders, operators, investors from all over the world who read and appreciate Weekly Olio.
And through your weekly newsletter, I landed up reading the fascinating story of You Only Need One, the State Bank of India's new app play. And this led me to dig into the origins of SBI, India's biggest retail bank with 450 plus million customers. So before we get into SBI's story, which dates back to the Mughal kingdom, what is an Indian household's association with money?
Very interesting question, Pritish, because the Indian household has traditionally been limited to cash for day to day, right? If we talk about our parents, our grandparents, all they had were cash and maybe infrequent visits to the bank to encash salary checks or pension checks or something else. And as a result, most of their investments were in gold, real estate, or other physical assets. There was very little investment, if at all, in financial assets. Whatever happened in financial assets was primarily bank FDs or very secure government instruments like public provident fund, saving certificates, etc., etc. As per analysis data in 2021, more than 96% of household savings are allocated towards these physical assets. Only 4% go to financial assets. And this is, I'm talking about 1991. The focus always had been on preservation, on saving. There was always a focus on how do you save the maximum without taking any risk. And hence, our parents and the older generations always optimized for safety versus generating any excess returns, which is why you saw them investing in these instruments. There was little stock involvement. And then if you look at pop culture, people who invested in the stock market were often called punters. Stock market was seen as a betting engine. But that has started to evolve. With the middle class ethos of living below your means, saving was the most important thing. Whether it was cash, and it was all meant to build future assets in the form of either houses, gold loans, or children's education or their marriage.
That's interesting. Has this association changed or evolved among the younger generation?
Pritish, I think it has evolved quite a lot and evolved for me, evolved for Mohit, evolved for you. And I think the most change has happened for the Gen Z as well. I think there are 2, 3 broader themes which are there. People used to do FDs, they were not comfortable investing money, but that trend is now changing. So essentially, people are less risk averse, they want to take that risk and they are looking for those returns versus just safety of that money. Mood mentioned almost more than 90% folks were just saving it. Now, if you see the share of financial assets in household savings / liabilities, it has gone up. So it was 56% in 2016 versus 65% in 21. Now, COVID has something to do with it, but it's a tremendous shift. If you look beyond, I think there are much more societal changes that are happening. Credit is no longer a taboo. So earlier it was like, oh, why would you take a credit for someone? Don't you have money? If you don't have money, why do you want to spend? But now the generation is comfortable taking on that credit and it's more responsible as well. They know that they have to pay it back. And the third, I think, which is more fundamental, is that they have very strong access to digital tools. I can share my own anecdote as well. So 2014, I graduated from college. I wanted to do a mutual fund investment, but I was simply running pillar to post which fund to invest, how to invest, what to do. But if you talk about today, you have n number of apps which aggregate all those mutual funds on a single platform, and you can just choose and invest. And UPI has also added to it. So I think there has been a tremendous change in how people think about financial investments and how they operate as well on those decisions.
That also brings us, as you mentioned, there are n number of apps. So the Indian financial system and the product offering has exponentially grown, especially after demonetization. Before demonetization, the traditional investments were gold, fixed deposits, real estate, and mutual fund.
So while demonetization played a role, don't think it was the only factor. Again, to give some context, the first Aadhaar card was issued in 2010. And the entire JAM model, which is having Jantan accounts, Aadhaar, and mobile linked together, the JAM Trinity as it was called, was proposed in 2014-15 in the economic survey. Since then, there has been a push on financial inclusion. We have seen investment from various stakeholders, whether it is the government, whether it is the private sector, into building on the financial inclusion part. Starting with bank account opening. There was a point of time in India when less than 30% people had bank accounts. But now, more than 80% Indians above the age of 15 have a bank account. And this is 2017 I'm talking about. Since then, that number has probably gone to 90%. Today, India is a world leader in things like real-time payment. In 2022, India had almost 90 billion payments via UPI. Compare this to 30 billion for Brazil and 17 billion for China. Countries like US are not even in the picture. Now go back 20 years. At that point of time, just imagine the hassle that our parents or even we had to face in college. You had to go to a bank, write a check, wait 2 days for the check to clear. Versus now, when you can just hit a button and the money gets transferred immediately. Similarly, on the investment front, we went from 19 million demat accounts in FY11 to more than 52 million in FY21. And this number continues to grow despite the macroeconomic headwinds we have seen in the last 12 to 15 months. So all of this, the right stakeholder involvement, the right technical infrastructure, made it super easy for people to get financial exposure. And as a result, the share of financial assets started increasing and more people started investing in these assets.
That evolution that we have seen in the last 10, 15 years per se, that is Aadhaar card, that is demonetization, that is the penetration of internet, smartphones, whatever you may call it, or probably it's actually a combination of all of it, does lead us to going back to what is the backbone on which this has been built, which basically is the story of State Bank of India, popularly known as SBI. I don't think any Indian ever calls State Bank of India as State Bank of India, if we all refer it to as SBI. The interesting thing is that most of us think of its creation or its creation is actually attributed to 1955. But the origin actually dates back to the Mughal kingdom. The Mughals minted coins, gold, silver, and copper, but they did not mint notes or printed notes. And in Hindi, we say kaudiyo ke bhav. Kaudi was actually a unit which the Mughals used to use. And the Mughals treasury, the emperor's treasury, the Mughal emperor's treasury was the central bank because they were minting and issuing coins. At the same time, they were also the traditional lenders. Along with the Mughal kings and the rulers of the empire, there were the money exchangers and money lenders. Now, these money lenders were basically very rich families, like the Jagat Seths of the world, who were lending money to other businesses and rulers. Interestingly, one of the moneylender families refused to lend money to Aurangzeb because his credit score was low. The lender didn't expect him to win the war that he was borrowing for. Now, this also goes back, and if you look at the history of the initial banks or the early banks in the world, the Bank of England or the Rothschilds, you will see that most of these came into existence because they were funding some kind of war. So that's interesting that how most banks or the banking system started.
Pritish, then maybe we could say in some sense that these bankers were the venture capitalists of that era, funding wars, the new endeavors, taking to new countries and driving new growth for their own masters.
I think that's a unique take to it. Could be. So are you saying that venture capital dates back to the Mughal Empire?
Could be, right? That is when risk taking started.
And as a matter of fact, Jagat Seths have a very interesting story. They were one of the funders of Clive Lloyd to overthrow the last Mughal king. Now, how did that happen? So, the last Mughal king had asked Jagat Seths to give them 30 million Indian rupees. Now, that's a huge sum of money. Think about the 1800s, the 1700s. And obviously, Jagat Seths said no. The king, then the emperor, the Mughal emperor, actually literally slapped the Jagat Seths. And that is where the Jagat Seths got envious and got upset about the whole setup. And they went on to actually fund Clive Lloyd to take a war against the Mughal emperor. And the Mughal emperor lost. And that is how the East India Company switched over from just being a trader to making India, or starting their initial days of making India a colony. This is interesting to also understand that as East India Company's dominance and network grew, they needed to expatriate the money circulating in India to England or wherever they needed to send it. They didn't care about the masses. So they worked with the government of Bengal to set up British India's first joint stock bank called Bank of Calcutta. Later, it was named as Bank of Bengal. Similarly, the Bank of Bombay and the Bank of Madras were set up. For all practical reasons, Calcutta was considered the capital of India at that time. Therefore, it was the biggest bank among the three. But an interesting thing happened. Due to the American Civil War, the American cotton supply to England got cut off. And the Parsis came into play. And they picked that business up from the Americans. The Parsis' cotton trade made the Bank of Bombay a commendable competitor to Calcutta. But after the American Civil War, the cotton business did slow down. But the Parsis and Tatas got into the opium trade, sending opium to China through Hong Kong. And that also became equally lucrative.
Pratish, this is quite interesting, and probably we are talking about 1600s to 1800s, that time period. And then at that point of time, mutiny happened. The British monarchy became more intricately involved in running the country. So did that change, or still Bank of Calcutta or Bank of Bombay were powering the economy the way they used to do earlier?
So that's an interesting point, by the way, Piyush. In 1857, the British monarchy took over India from the hands of the East India Company. And they decided to amalgamate the three banks into one. And these three presidency banks that they were called, the Bank of Bengal, Bombay and Madras, they were all amalgamated into one bank, which is called the Imperial Bank of India, IBI. At this time, the IBI was a central bank as well as a retail bank, basically taking deposits and giving out loans. It was only in 1935, still the British were ruling, that RBI was set up. And in 1955, 8 years after independence, the government of India and RBI took joint control of the Imperial Bank of India, nationalized it and named it the State Bank of India. And that is where the journey of SBI begins, the institution that became India's growth backbone. Now, banking seems to be simple. It's what? Borrowing, lending, and you just keep adding products around it. But it's very hard to survive in. After 1991, a number of banking licenses were given out to several players. But today, only 4 players come to mind: Axis, HDFC, Kotak, and ICICI.
Interesting history there, Pritish. And when you mentioned those 4 names towards the last, right? That also raises a fundamental question on how Indian banking has evolved or is evolving probably. But if we come back to SBI, let's say, how do you think SBI played a role in powering the Indian economy, growing it over the years? What are your views on that?
I think biggest contribution that SBI has is talent. And there have been multiple iconic chairmen who have transformed not only the bank, but also the country. The most important aspect about SBI chairmen is that they're unassuming for the power they wield. How many SBI chairmen can you really remember on the top of your head? If I ask you who's the present SBI chairman, you may know or may not know. It's a good Kaun Banega Crorepati question. But there are a number of iconic stories around each or most of these chairmen. There was a chairman called R.K. Talwar. He was made the chairman at the age of 45, which is very young. And he's also known as the most ethical chairman of SBI. Now, how did that happen? When he became the chairman, the then Prime Minister, Miss Indira Gandhi's son, Sanjay Gandhi, needed a loan to be passed for one of his friends. And R.K. Talwar said no. So Sanjay Gandhi went to the finance minister and instructed him that you should remove R.K. Talwar from his position. The finance minister said, sir, I can't do it because R.K. Talwar has been put there by an act of the parliament. So the finance minister does not have that right. If you look at all of this, these iconic stories of these unassuming humans who run such a massive operation in terms of not only the capital they manage, not only the number of branches and the number of people. So I think talent is definitely one. And the other part of it is this. Think about investment banking. SBI Cap has trained a number of leading investment bankers of India. Obviously, SBI Cap was the initial investment bank of India. And from there, people have moved on to other banks, to other investment banks to basically lead that operation. And then comes SBI Life Insurance and Cards. These are products and services just by the volume that they manage. It's a fundamental learning ecosystem for all banks and also for different corporations. But I think those are the things that I feel has definitely contributed towards the Indian banking ecosystem.
So, Pritish, interesting point on talent. Just a cool fun fact. So, when I graduated from Ahmedabad, the convocation address was delivered by Arundhati Bhattacharya. She was, I think, the first woman chairman of SBI. And now I think she leads Salesforce in India. So, just goes to tell you the kind of talent, the depth of talent that SBI has. Then you have somebody like Rajneesh Kumar, who did not just have a legacy with SBI, but is also powering financial inclusion with BharatPe, right? A completely new age startup. Very deep bench of talent that has impacted not just the financial sector, but also sectors beyond, because Salesforce is something very different from what an SBI does. But yet she leads the country and leads the charge for that company in India.
Where does SBI stand today?
In one word, Pritish, SBI is a behemoth. It is one of India's few companies in the Fortune 500 index. It has more than 450 million customers, served by a network of more than 22,000 branches all across the country. You go to any nook and cranny of the country, you will always find an SBI branch or an SBI ATM. In FY22, they did $50 billion in revenue. And they have a current market cap of 60 billion. This market cap was 65 billion when they wrote the article. Since then, the Adani saga happened and it has dipped a bit. But that doesn't take away from how big or how important SBI is as an institution. In terms of employees, it has more than 250,000 employees across the country. And not just in India, SBI has a presence in most countries across the world, whether it's the US, whether it's Singapore, whether it's Southeast Asia. Anywhere you have Indians, you will find an SBI branch. SBI is a behemoth in terms of just the sheer numbers, the sheer volumes that it drives. And hence, it has an outsized impact on the Indian financial landscape and defines how every Indian perceives or uses financial services.
Given that SBI had such a great head start, today it has commendable competitors such as HDFC, ICICI, Axis, Kota. So where did SBI lag?
I think, Pritish, it's a two-part answer. While you see these private banks, they have a very similar focus in terms of ROI, profits, etc. SBI, to an extent, also had to run the mandate of the government, which was financial inclusion. Again, we talked about the history. These banks came in 1990s, but it has a legacy wherein it is taking up the burden of promoting financial inclusion in the countries. So banking the unbanked, going to branches in the remote areas, I think that's one part of it. Second is very high focus on private sector lending, which probably other banks simply buy bonds of SIDBI and don't do the hassle. As you will find SBI branch or a branch manager going out, checking and doing those private sector loans which are required. So that's one. And again, if you do that, then some of your focus on profits, etc., will diverge. The second thing, which is quite a funny, or maybe it has simply come to SBI because of its size, any lending consortium to a business was led by SBI. Now, it could be virtue of its own size, and those loans have gone bad. You name it, you have it. So you have Kingfisher, you have Adani, you have Bhushan Steel. The list is long. But fortunately, unfortunately, I think it was the only bank who had that prowess to probably lead those consortium at that point of time, and which was the requirement. And it did what it had to do. So I think some part of government's mandate and then some part of its own underwriting process maybe made it subpar. But we will be talking about it, how it's emerging now. I think that there is some light at the end of that tunnel.
HDFC and ICICI both kicked off in 1994. Their history is probably, let's say, 30 years, more or less. So what did they do to become market leaders?
I think if you contrast SBI versus HDFC or an ICICI, you will see, and you also mentioned, right, the kind of customer base which SBI had versus these banks had. So HDFC, ICICI, metro, tier 1 city based, salaried, private sector folks, versus SBI is largely government employee base or traditionally unbanked population. And if I could give you a perspective there, the retail loan book for SBI is somewhere around 2 lakhs crore, out of which 80% is coming from center, state government, defense and other public enterprises. So I think the kind of customer base that SBI had or it went after versus what an HDFC or an ICICI tried to do was way, way different, which ultimately led to the opportunity on upselling and cross-selling. So upselling and cross-selling was a big lever for these new banks. And for SBI, it's something that they could even not think about or probably focus upon, at least in the initial days. And as you generate wealth and wealth attracts wealth, HDFC, ICICI, they had a freedom to expand in areas wherein they think that they need to invest and get good ROI out of it. But SBI got stuck on government mandates, etc. Plus, a major differentiator between these two were that since they were private and they had more exposure, they also invested in technology, which SBI never thought of, at least at that point of time. So I think these are the 3-4 reasons which made these banks move really fast. And today we feel that though SBI is big, but an HDFC or an ICICI is equally good or maybe better there.
Also, just connected to that, looking at the financials, the SBI stock price had plateaued for 10 years. From 2010 to 2020, it was in a range. But in 2021, it broke out of its range and the price went 2x. Why did that happen?
So, Pritish, part of it was sectoral. I think Indian banking sector as a whole was moving ahead. But there was another factor which we sometimes miss is the kind of NPAs that Indian banking, in particular SBI, which we spoke about, was facing. So the books were bad. And the insolvency and bankruptcy code came in somewhere around 2016-17. And so Bhushan Steel went into IBC, some of the others, Rosneft, etc., went into IBC. And By 2020, you started seeing some sort of cleanup happening in the system. So whatever provisions or whatever write-off SBI had done earlier, I think it started recouping that money. And as COVID came, they had access to cheap money. Those net interest margins, overall profitability improved. And hence, people started seeing that, yes, this brand also has that value, and that value got unlocked in the rally that we are talking about.
So, what is SBI's mood today against all its pluses and minuses?
So, Pritish, if you look at SBI, right, and we break it down, there are primarily two major modes that SBI has, and these are not replicable very easily. Number one is that SBI is still the backer to the government. All our tax collections, whether it's indirect tax or direct taxes, are collected by SBI. Whenever Indian government needs to do any transaction internationally, typically it is done by the State Bank of India. And as a result, the State Bank has a certain amount of business that comes to it simply by the virtue of being associated with the government of India. They are a systemically important bank as ordained by the RBI. And this is a very strong move, very hard to replace. While we have seen over the last few years, the other private banks also getting a look into this space, but SBI is still the dominant player when it comes to the government's business. Number two, which is a corollary of what we discussed earlier, driven by the government's financial inclusion agenda, driven by the idea of financial inclusion, they have been able to build a presence across the country. In every nook and cranny, every remote corner of the country, you will find an SBI ATM, you will find an SBI branch. Now, this distribution network is something which is golden. No other bank in India has that. And SBI has also leveraged this network to launch its subsidiaries. So when we talk about SBI cards, when we talk about SBI mutual fund, why are these the biggest players in their categories? Simply because they leveraged SBI's huge distribution network, which no other bank had access to. HDFC, Axis, ICICI, all of them had to build the distributions from the scratch. But SBI got that push from the government. They got that stress that, hey, you need to go out and open those branches. And as a result, they acquired more users. And now they can leverage that network to deliver a lot more services. Given these two things, they're probably poised to deliver a lot of value in not just core banking, but also a lot of these ancillary financial services for the Indian population.
Let's get into neobanking. When did this phenomenon or the concept of neobanks kick off?
Neobank is an interesting term. So neobanks, they are also sometimes called challenger banks. By definition, these are digital-only banks that operate completely online. Now, these guys are called neobanks or new banks or challengers because they see themselves as rebels. They say that, hey, the traditional banking system does not give the right customer experience to their users, and we will disrupt that system. That is why you have this bank and neobank terminology in the first place. The first neobanks emerged in Europe right after the 2008 financial crisis. All of these banks wanted to leverage tech to create best-in-class experiences. Now, within the neobank ecosystem, there are two types of players. Player one is someone who has a banking license. So, if you talk about Chime in the US or Nubank in Latin America, these are full-fledged banking providers with their own banking licenses. The second category are the ones who are pure tech players. They partner with existing banks who have a license, but may not have the capabilities on the technical side of things. They create a strong tech wrapper, which is user-centric, high-quality design, high-quality product, with the aim to create the most seamless and the most efficient user experience. The US and Europe have fairly large neobanks. Nubank in Latam has about 75 million users. They are a listed company and doing pretty well. In the UK, you have Monzo and Revolut. In the US, as I said earlier, you have Chime. Typically, when you talk about neobanks, they will have three USPs. Number one, the app or the web interface will be sleek and like consumer apps. Unlike traditional banking apps, which are built by traditional banks without tech expertise, these are built by people who have built consumer products earlier, which means that the product is finished, the design is a lot better, and the user flows are a lot seamless. And hence, the user experiences a lot more delight while operating with these apps. Number two, because these banks are completely online, they don't have to open a network of branches, or they don't have to have a large number of employees, which means cheaper services and cheaper pricing for the end users. Number three, they have been an easy source of access to banking services for unbanked population. May not be true in India, but this has definitely been the case in the US, in Europe, or in Latin America. In India as well, right? Neobanks as a concept have really taken off over the last 3 to 4 years.
You talked about neobanks also focuses on the unbanked population. Now, that is a great use case. But if the unbanked population is illiterate, will neobanks work?
Neobanks can actually help unbanked because they're likely to be more illiterate. I think that depends. Given how neobanks are designed, they are designed more like consumer apps. And in today's day and time, whether you are illiterate, whether you are from a not so economically savvy background, you are typically conversant with the current crop of consumer apps. And these banks want to leverage that muscle memory. And hence, even if you're not literate, typically that's not a concept. Second, these neobanks also try to create multiple languages within their product. So in India, we'll talk about YONO also, but YONO has 10 different languages to make itself accessible to different types of users. They also do a lot of accessibility related stuff. So you'll see features around voice activated, let's say, logins or thumbprint related logins. They will have chat support, real-time chat support. Some of them in, let's say, LATAM or India might also have call support. That is how they drive adoption within the unbanked population, which may or may not be illiterate.
Piyush, what are your views about the neobanking system in India?
There has been a flurry of neobanks in the country, and everyone has realized that RBI is not going to give license so easily. Like multiple people have tried and multiple people have failed multiple times. So let's leverage those licenses and, as Mohit was saying, build a wrapper on top of it. So if you talk about 2021, everyone was raising money left, right, and center. Around $1 billion went into creating these new banks. Jupiter, Neo, Open. Even Open became a unicorn in the last quarter of FY22. So everyone was raising money, and everyone is trying to find a niche or a wedge, if you may call it that way, to offer a product and also associate a banking savings bank around it. So if you talk about a Forex card, so Neo came up with a Forex card, very interesting concept, that you put money in our bank account, which is again digitally open, etc. You don't need to go to a bank. And we'll give you a debit card on which we will not charge any markup if you go to international and spend out there. Or if you talk about cards, credit cards like a Unicard or a One Card, they are saying, okay, if you go to a traditional HDFC or a SBI, you may or might not get a credit card. We have a better underwriting process, so we'll get you a card. But here again, there is also a savings account attached to it. Why don't you opt for it as well? And Open take a very different route. They went on the business side, so SMEs, etc., needed accounts and different amenities along with it, which Open said, okay, I can do it. I can devise private label solutions, etc. So each one of them created a wrapper on top of banks like an RBL bank, DCB bank, or a Fed bank, which people don't generally go and open account with. So I think it was a very symbiotic relationship, which I'll give kudos to who thought about it, in terms of leveraging the existing banking system and probably making it more efficient and reaching the current Gen Z users. And this also ties back to our conversation, that how Gen Zs are thinking about things. So if you go to a Jupiter app, you will get a savings account, but then it will also nudge you or prompt you to invest in gold and small amounts like 10 rupees, 15 rupees, 20 rupees, which the Gen Z feels, yes, okay, I need to be responsible and I can do this. Slowly, you will probably have mutual funds, etc. over there. People who have mutual funds grow, etc. now want to have a new bank because they again feel, let's get Gen Zs here. That's how this entire ecosystem is evolving. Everyone wants to give out a new bank because it has become so easy.
And YONO is SBI's neobank play. Is that correct?
That is interesting because, again, by definition, neobanks are outsiders, are rebels. So a traditional bank making a new bank, sort of an oxymoron. But yes, it is SBI's digital banking play. It is the play through which SBI wants to have a digital first, consumer first approach to banking. and shed its image of being a lethargic a public sector enterprise where you had to go to a branch, wait 2 hours to get a token, and then meet somebody. So this is their attempt. And to put it in some more perspective, Yono was not born out of the blue. SBI had a history of investing in tech upgradation. As we said earlier, HDFC, ICICI started early on their technical journey. They were investing in technology. HDFC, when it was founded, had a CTO. Now, that's something which was never heard of in banking at that point of time. But SBI had started to catch up around 2010 onward. So they started by upgrading their backend. So they invested thousands of crores in moving from the traditional paper pen systems to core banking solutions. They moved their entire personnel system from traditional paper pens to online systems. Not just that, they also launched a bunch of apps. You will be surprised, but at one point, SBI had at least 15 different apps doing 15 different things. Now, the question is, why did SBI do that? One reason why HDFC and ICICI have done really well is that they have been able to reduce their cost to income by, again, leveraging technology. And second, they have had the opportunity to cross-sell and upsell to their user base. SBI wanted to do the same thing. When you move from this legacy system to a very tech-first ecosystem, you can reduce the cost to serve a customer. Second, what you can also do is you can reduce the number of people that are employed in operations. You move these people from operations to sales. And this sales then starts driving cross-sell and upsell. Now imagine when you have a 50 million big customer base, even small shifts could lead to big changes. And this was the entire story behind SBI investing in technology and investing Yono at that point in time. Given this background, the launch of Yono was a very logical need for SBI. Right? Another reason why SBI thought about this is, we discussed this earlier, 80% of SBI's retail asset base or retail consumer base comes from the public sector. What they also observed is that the millennials were not really choosing SBI because they had choices. You had ICICI, you had HDFC, you had a bunch of these smaller banks as well, which provided better services. They were more customer focused. They were willing to listen to your problems. SBI was none of that. So they were worried that if this continues, and once the older generation retires, how will they source new accounts? And how will they source high quality accounts if they want to cross-sell and upsell? This is also the thought process behind putting their money and their capital behind building a high quality consumer focused app like SBI Yono. Now, coming to the story of how this actually started, to SBI's credit, they as an organization have never shied away for asking for help. They have relied on consultants to drive their strategy. They have worked with large tech companies to help them in their transition. So the Yono journey was very similar. They invited a bunch of consulting firms, technology firms to present their views on how to build an app for millennials so that they could tap into that market. There was a team from McKinsey, which also presented a pitch. Now, this pitch was slightly different. They focused or they stressed upon two facts. Number one, instead of just millennials, SBI should build a product that could be used by its entire user base of 450 million people. Why this? Because this could help in two ways. One, it could help drive the sales of the current core banking product and also the subsidiary products, whether it's mutual funds, credit cards, insurance, etc., etc. Second, they also wanted SBI to leverage the incoming wave around e-commerce. So they wanted to create an online marketplace where people could open the SBI Yono app and not just do banking, but also buy products, buy tickets, or just engage with e-commerce for the first time. And this is how the foundation for SBI Yono was laid with help from McKinsey. So SBI liked that pitch, the chairman liked that pitch, and they said McKinsey, hey, go ahead. Why don't you go and build it? And in parallel, they also worked with IBM, who was the technical consultant behind building the app.
That's fascinating, actually. But I also feel that McKinsey's recommendation of trying to build for the entire user base of 450 million is counterintuitive, especially if you speak to Peter Thiel. He would tell you to focus on 1% of the market. How do you think that is playing out?
To be honest, Priti, I think SBI didn't have that 1% of the market. And that was lying with HDFC or ICICI. So the thinking there was that whatever we have, the size or the volume that we have at this point of time, if we convert X percentage out of it, that still will be a very huge number. Probably more than the base of an HDFC or an ICICI. So I think that's how it started in terms of, Mohit also mentioned, that build an online marketplace for meeting needs, not only financial services, but beyond that. So when they launched, they merged their existing 12 services and they also brought in 60 e-commerce partners. And even Flipkart was also there. So you go to the app, you say shop online, and then you click on Flipkart, and then you have that journey of buying stuff. Now, people also trusted SBI because, again, it has been there and the branch is also nearby, kuch hota hai, so you will go there. But it was also, again, riding that internet penetration, which was going into the rural areas, etc., along with that trust, along with the sheer base that it had. And I think the second thing which they also sort of positioned, if you read the name again, it says you only need one. So be it finance, be it loans, cards, or maybe e-commerce, you only need this app. And again, what Mohit was mentioning, the kind of tech they were trying to build in. So if you want to open a bank account, now it can be done in 10 minutes. If you want to book a FD, it's just 4 clicks away. Earlier, it was like you go to a bank, you spend an hour there, you fill the form, there are 60 fields around there, your account gets activated the next day, etc., etc. But I think everything was done away, everything was made so smooth. Payment was improved like anything. So earlier, if you want to do anything, there were 20 to 15 clicks on the net banking website. But if you use the app, you can just do in 2 to 3 clicks. I think whatever they offered to the entire gamut of their customer base still worked. And I think it was a very conscious bet, or it played out. I think the team can only tell. But at least if you see in the market today, the results have been good.
After all this, how has fared?
I think it's doing quite good, Pritish. What we talked about earlier, not only financial services, but also e-commerce. So it's quite surprising to hear that this app generates around $2 million of GMP. It's just a mind-boggling number. I couldn't believe it, couldn't believe it, but it's true, right? It's working out there. It has around more than 50 million active users. So that makes it bigger than Nubank in LATAM, the whole of LATAM. You are having around 200 to 250 million dollars worth loans every month, which is huge. Some estimates suggest that if Yono was an individual startup, it would have been valued somewhere around a 40 billion to a 50 billion. So more than a decacorn in its own right. I think that bet which SBI took has played out really well, at least till date. Mohit, what do you think?
Completely agree. To add to that, one of the initial thesis was that how do we get millennials or new users to start appreciating VI as a bank? With Yono, what has happened is that thesis has played out. Now, if you look at the last quarter's results, 65% of SBI's retail savings accounts are sourced via the Yono app. And more than 40% of the retail assets are also sourced via Yono. So imagine if Yono was not there, a lot of SBI's growth would just not have happened. Today, SBI Yono is a super app with three primary components. There's, of course, the pure play banking. You add funds, you withdraw money, etc., etc. Second, it is a financial superstore. So it has the SBI ecosystem. It has different people, different types of products which SBI itself has to offer. And third, the marketplace has continued to grow very strongly. So they have continued to add more brands. The selection has gone up. They have also launched things like Krishi credit card on the app itself. So they are going deeper and they are trying to leverage or try to harvest the existing user base itself. And that in itself is a long journey before they just talk about the new accounts that are made.
What do you think would make a success from here on?
They have leveraged the existing base to drive adoption and awareness. So Piyush had an interesting story around how he was asked to download the Yono app, which tells you how strong the distribution has been. But the product offering is very strong. For any app to become big or for any product to generally become big, the USP has to be very solid, which this app has. A single point or a single window to the SBI world of financial services, plus the entire e-commerce ecosystem that they built around it. As a next step in Yono's evolution, SBI is already planning something called Yono 2.2. Now, Yono 2.0 will have two components. Component 1 is focused on business banking. Yono 1.0 was focused on just handling retail use cases. How do I get more users? How do I get more retail customers on the app? Yono 2.0 will be focused on business users, SMEs, small enterprises, industries. How do I get them to start using SBI even? The second component is that slowly SBI might also open up the Yono platform for other third-party ventures. It could mean other PSU banks, or it could also allow fintech startups to build neobanks on top of YONO, right? They could open up the APIs, they could open up the entire ecosystem and allow others to build better products on top of it. Now, both these directions are very interesting and these are massive markets. If SBI is able to crack even some of it, and they have given enough proof that they can do it with the journey over the last 5-6 years with 1.2, it will be a massive win for SBI's customers, shareholders, and the team that is building these products.
This has been a fascinating conversation, not only deep diving into SBI's history, but also your take on the possibility that it holds. In my understanding, I think YONO SBI's success here on is based on two things. One is its existing trust base that it has with the older generation and which probably seeps into us and the younger generation as well. And the second is using the trust base and executing to their best hilt. But that's not easy because if you look at SBI, it's not a corporate multinational like an ICICI or an HDFC. It is still a nationalized bank. And the people who run it are mostly people who come through the nationalized examination system, don't come from an MBA, right, or MNC experience. The people who are running it are very unique. The mandate that they have is probably one of the biggest in the world. And the customer base that they have is so varied in terms of literacy, in terms of their understanding, in terms of their language, in terms of their culture. I think it's a fascinating mammoth that SBI is and potentially will be going forward.
It will be an interesting journey to see how this unfolds and where it goes from where it is to.
The SBI talent is also unique in another respect. All other PSU banks will typically have leadership from the IAS cadres. You'll have an IAS officer who will come in as a bank, who will come in as a chairman, and they'll have short tenures. SBI, on the other hand, has had the fortune of having stable chairmen who have spent their lives in the system, which gives them unique perspectives, which gives them the institutional knowledge. And more importantly, they have the mandate to execute on that vision because they are there for 5-6 years at the helm, which is a luxury which has not been afforded to a lot of other PSU banks. And then that could be an interesting trump card, which SBI holds as it goes on its future.
What Mohit mentioned in terms of the talent. So if you see probably Arundhati Bhattacharya or Rajneesh, both joined as an entry-level employee and then risen through the ranks, being an SBI chairman. So whosoever comes in SBI, I think always has been a career banker, knows the system in and out, handles the government vendors, at least powers the economy well. If that part of it is kept constant, some degree of investment in technology, the bank will flourish more.
Guys, this was the most fascinating conversation I have ever had on the show. So thanks for being a part of this, co-hosting it with me, and sharing your insights.
Thanks, Pritish. Thanks for inviting us.
Thanks, Pritish, for having us. It was an interesting conversation for us as well. We got to explore a few parts that were not taken in our article. So thanks for the insightful discussion.
If you enjoyed this episode, subscribe to Mohit's and Piyush's weekly Olio newsletter. You will find the link in the show notes. And do share the episode with someone who will find it valuable. For any recommendations and feedback, you can drop me a line at pritish@1%.life. Until next time.